What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. I hope you are having a wonderful day. Today, we're going to be doing our weekly SPY recap. We're going to be looking at all the trades that we got in our live Discord, and we're going to be looking at the results. And I'm going to be walking you through everything step by step. All right. So if you're ready, let's step into the war zone. First and foremost, let me go ahead and shout some of you out. Please let me know where you're tuning in from today, and I'll throw your name up on the screen. Shout out to all the Trading Wars Army members in the building. Bad Indy, what's going on, brother? Good to see you. Roop, good to see you. Adriana, what's going on? Mittel from Regina, Canada, what's going on? WV Trader from WV, what's going on? Luca, good to see you. Good to see everybody here in the building. Hit me with a 1 if you can hear me okay. I think I'm lagging just a little bit today. We have Ramon, what's going on? Dizzy, what's going on? J-Ro, what's going on? May, what's going on? Butter, what's going on? Good to see you. All right. Goofy, what's going on? Good to see you. All right. So let's begin. So the first and foremost, let's go ahead here and let's start from the beginning. So we're going to start off with Friday's price action. Okay. And what you want to do every day is start off with two lines. You want to have the previous day's high and the previous day's low marked. And the reason you do that is because it helps you to get an idea of where we're opening. And where we open determines the type of trading strategy that I like to use, because it lets me know at the open who's trapped, who's in trouble, where can I make money, where do I need to go, right? So that's what I'm looking for right off the open. Okay, so here we go. The other thing that I'm going to do here is I'm going to go to our triggers, and I'm going to draw the trigger, which was 443.48. So the trigger is just a line where we would like to go long or short once it breaks that line. Okay, so I'm just going to go here, 43.48, which is right there. And I'm going to make this in yellow. Okay, so now we basically have the map right here. We have the high and the low, and we have our trigger. So we want to be long once we break 443.48. So let's watch this price action at the open. So the first candle comes in right here, guys. And this one was a little bit disappointing because we had our order at 443.48, but the low was actually 443.51. So we missed our entry by 3 cents, which is a little bit tough because if we caught our entry right there at 48, we would have been able to make a lot more money. But from here, what we did is we actually ended up taking an opening range breakout. So that's the first strategy that we're talking about today, which is an opening range breakout. Okay, and this was done on the 3-minute chart. Okay, so there we go. So G, what's going on? Andy, what's going on? Victor, what's going on? Good to see you guys. So we started off with the opening range breakout. So let me just go to the live commentary here and let me walk you through this. Okay, so good morning, friends. We're opening inside, which can be very choppy. I'll be taking an orb 3, 5, 15 minute, but make sure to size down so we can finish the week green. All right, so we missed our trigger long right here, and then we ended up getting long at 9:34. So let me walk you through this. Okay, so what the opening range breakout is basically is the first 3-minute candle is going to create a range. It's going to have a high and a low. So what we're doing is we're just going to take the breakout of that candle. So if it breaks the high of the candle, we want to go long. If it breaks the low of the candle, we want to go short. So go ahead and hit me with a 1 if that makes sense. Okay, so that's the opening range breakout. That's the first strategy that I like to use. It's basically just waiting for the first 3-minute candle to close and then taking the break. So if it breaks the high, long, breaks the low, short. Okay, and the high of this candle was 444.02. So let me go ahead and I'm just going to move these lines now, and I'm just going to put them on the candle for our reference. Okay, so here we go. All right, so there is your where you want to go long, and here's where you want to go short. So let's watch how the price action played out. So we got filled, boom, right there, guys. And that is the power of the opening range breakout. Like, that is just crazy. This one got filled, and right away we had a squeeze in the morning and we hit our targets. So how do we do the targets? So what I do is I take a Fibonacci, and I talk about Fibonacci's greatly in my book. What the purpose is here is we take a Fibonacci, we take it from the low to the high of the candle. And what we like to do here is we like to use these extensions. So these are the extensions, the custom extensions that I've created. The 10%, 0.169, 272, 50, 618, so on. So we have a very simple process here. Once we get filled, we want to go ahead and take targets from the 272 and above. All right. And you'll see here, in the room, I lay out the targets. So 44416, 28, second target hit. Then basically we hit all the targets basically within the first 3 minutes, which is pretty crazy. And then what I like to do after that, once I hit all the targets, I like to leave a runner with a stop loss at break even. So putting the stop loss here and just letting the play out from there. So, but you need to make sure to always take your profits on the way up, because as quickly as you get it, it can disappear. And I'm going to show you that actually happens later on in the day, that we had this push right here. And let me turn this to you guys. So how many of you after this would just think like the day is going to be very bullish? Hit me with a 1. You just hear the first 2 candles of the day. How many of you would think that this would be extremely bullish? Or hit me with a 2 if you don't think so. What do you guys think? Hit me with a 1 if you think this is very bullish. Like if we look at this chart, right, and we follow every technical price action, whatever you want to call it, this is a bullish chart, right? It's breaking out. Here's the previous day's high. We had a higher low, higher low, higher low, higher low, blah, blah, blah. We broke out, flag that, cup and handle, spoon and fork, all of that. Okay. But this is the truth about the market. As quickly as it gives it, it can take it back. And then you're going to see right here, boom, we get an inside bar. And then from there, we roll over. See? So that is how it is, right, guys? That's how it is. And with the strategies and with the indicators, we got the signal right here. So the inside bar is a pause, okay? And whenever we get an inside bar like this, we know that it could go either way, because this is basically saying the bulls lost steam. And inside bars are one of our go-to candlestick patterns that we like to trade in the room. So we had a beautiful inside bar at the top of the range, which took us all the way back down into the close. Okay. So basically here, guys, what we have is we had just the opening range breakout. That's all I did on that day. I locked in my profits. I put the stop loss at break even on my runner. It came back, it hit my runner, and I was done. And that's the way I like to trade, because I want to take the most reliable trade of the day. And the more reliable trades of the day are usually going to be in the morning on the open, because the open is where all the volume is going to be, right? That's where the majority of the volume is, in the open. So you want to come and get a play right off the bat. If it works out, you make good money. If not, take your loser, come back the next day. Hit me with a 4 if you followed me there. That's the opening range breakout, okay? And what I'll do now is I'm just going to quickly talk about some of the other trading opportunities on the day. For some of my members trade a little bit later, and that's totally fine. But my personal way is to just trade the morning for SPY. But you can trade as much as you want, as long as you're using good risk reward. And I like to tell people, try to keep your trades. If you're a new trader, try to stay under 3 trades a day. That way, that's a good number that I like. Or have a time, say like after 1 o'clock, you're not going to trade. Do something to protect yourself, because over trading is also one of the biggest things that can lead to failure. Okay. So after here, guys, so we had, I'm on the 5-minute chart now. So we had a lot of fib action that took us into the close, basically. So if we take this morning leg from high to low right here, we had this 382 rejection here. And then from that 382 rejection, if we take it from this leg, which is the next leg in the sequence, we bring it down here, we had this 786 rejection. A really nice place into the close was this Nirvana. So one of the things that I teach my traders a lot is to look for the blue highlights and the yellow highlights. So the yellow and the blue. Those patterns are rare patterns, Nirvanas and Holy Grail. And they give you a good risk reward, because you just end up risking 1 bar. So you could see we had a Nirvana that came in around 245, and this one broke the low, took us straight down into the close. You had a nice tight stop loss there. So the lottos here, 0 days to expire plays, very, very powerful on that play there. So, if you're going to trade later on, focus on the fibs, focus on the advanced patterns, have some kind of confluence. Don't just take every single trade that you see, because look, if you started trading here, you took every single inside bar you've seen without any purpose, you would have gotten destroyed, because look at all this chop. Okay. So hit me with a 10 if you followed me on Friday's recap. So my golden indicators, if you don't have them right now, I'll go ahead and link it in the chat. So my golden indicator, here's the link for my golden indicators. You guys can use that. So this is it right here, Trading Wars golden indicators. I have an advanced version for my members only, but the basic version, you still have all the patterns there that you can use. Okay, so the advanced version gives alerts to your phone or your email. And we also have a separate indicator for the Nirvana, which is the one in blue. And that one is just for my book members. All right, so I did that for my book members. And while we're on this topic, we actually are live on Trendspider too. So if any of you guys use Trendspider, let me go ahead and show you guys how to add it real quick, and then we'll get back to the recap. So let's see. So here's Trendspider. So if you go to indicators, right, and you go here and you type in golden, you'll get the Trading Wars golden indicators right there. Okay, so you could also use it on Trendspider. I believe you need to have an account, like you need to have a plan, but then you can get all of the indicators in one package there as well. So if you're interested in using Trendspider, please use my link, because you'll get a discount on that. If you do want to sign up with Trendspider. Okay, and I'm trying to work with them for more for like some better packages and stuff for you guys. So let's continue. All right, so that was Friday. All right, so now let's go ahead to Thursday. So Thursday, sorry, I keep forgetting. So Friday, the market was closed. So this was Thursday. Okay, so this was Thursday's price action, and then here was Wednesday. So what happened on Wednesday for me was basically nothing. I didn't end up taking any trades really, because we had an inside open. So let me show you how that worked out. Okay, so we're gonna go ahead. Let's replay Wednesday, and I'll walk you through everything here. So if I go ahead and hit the replay, 9:30 right there, and then I'm going to go ahead and draw the previous day's high and low, and then we're going to walk through the price action. So we opened near the bottom, right, of the range of Tuesday. And because of that, I didn't want to take any trade, because I was expecting us to just chop in this range for a while. So I had my triggers to go short if we came a little bit lower here, and then I had my trigger to go long right there. So I didn't take any plays on that day. I was just looking for the triggers. And what you will see here actually was the opening range breakout was really, really powerful that day. We also had one amazing Fibonacci leg that my brother actually took in the small account challenge. So I'll walk you guys through that one. But me personally, I didn't take anything on this day. So I'm going to walk you guys through that. Okay. So here we go. So this is the morning. Okay. So the morning, right? Generally, you're going to get a push in one direction. So it's either going to be up or it's going to be down, right? So a lot of times you won't go sideways in the morning. You're going to have some kind of move generally, right? You're either going to go up or down because there's a lot of volume. You're not really going to chop. In the afternoon, you're probably going to chop a little bit, okay? So you could see right here, this move right here, guys. So from 9:30 to about 9:50, so around 10 o'clock here, what kind of move is this? Hit me with a 1 if that's a bullish move, or hit me with a 2 if that's a bearish move. So is that move vertical up, or is it going down? Hit me with a 1 if that's up. Hit me with a 2 if that's down. And then I'm going to talk to you now about the fibs. All right. Corey Lewis, thank you, my brother, with a 199. Very much appreciate you. You love the material. I really love you for being here. Thank you very much. Appreciate that. All right. So yeah, so we're going up. All right. So now, okay, I'm going to spend a little bit of time on this, okay, because this is questions I get often about the Fibonacci. So what happens is once you have a push up, what would normally happen is you will have rookie buyers, right? You'll have new traders that will buy the peak because they get FOMO. So after we've gone up 4 or 5 bars, what will happen now, like some rookie buyers, new traders will get FOMO, and they're going to start buying at the top. Okay, hit me with a 2 if that makes sense, right? And we've all done that before, right? We've all done that. I've done that before, right? You see the markets going up, you start buying calls right away. But if you look at this, this is already 4 or 5 bars gone vertical, right? So a lot of the times what happens is the new traders are going to get trapped. Okay, but as a pro trader, as a professional that's looking for a good risk reward, what you want to do is you want to use the Fibonacci. Why? Well, the Fibonacci is going to allow you to get in on a pullback, so you're going to get a good deal. You're going to get in when the market comes to you. So that's why I love using the fibs, and that's why we've been doing only Fibonacci in the small account challenge. So what we do here is once you have that push, okay, so I'm gonna hit the replay again so we can walk. I want to simulate this in real time for you guys. Okay, so let's walk through this now. So here's your first bar right there. Push up, push up, push up. So what you want to do is in real time, okay, you start off, you put your Fibonacci on the anchor point, which is going to be your low. So now your high is going to be moving. This high point, see this top point is going to be moving, because if you make a new high, you move it higher and higher and higher and higher until you start to reverse. So you can see here is where we start to reverse. So now my anchors are set. So there's my low and there's my high. So what you're looking to buy is in the golden zone. And the golden zone is going to be from the 50 basically down to the 786. This is the area that I like to buy the dip. And what you're looking for here is a move like this. You had a vertical move like that. And now we're going to come back down into the golden zone. And what you're trying to accomplish with the fib is buy the dip in this golden box here. And then you're hoping that the market's going to pop back up. Okay, because the Fibonacci is using the previous bullish momentum, looking for a pullback to get a better deal, and then taking that pullback into new highs, or just, if you're scalping, just scalping it to the next fib level. So hit me with a 7 if that makes sense. You follow me there on the fib. That's the morning leg Fibonacci. The purpose of it is to allow the market to come to you. So how do you let it come to you? You wait, you have your orders waiting on the fibs. Okay, and I'm going to show you an example of with the broker statement with my brother who did that in the small account. Okay, so I'm going to pull him up over here and I'm going to walk you through. So this is the same trade we're looking at. Okay, so the total profit on this trade was $625.66. All right, so I'm gonna go ahead. I'm gonna take my time here because I think it's very important. Okay, so I'm gonna take my time and explain this to you guys. So the instrument that we use for trading the futures is trading fibs is the futures contracts. And the reason we use futures contracts is because we get a lot more leverage than using the ETF. Okay, but you could do anything. You could do option contracts, you can do shares, anything. But we like to use futures because you get a very high leverage. All right. The futures contracts are basically it's the SP 500 futures, and they're open right now. Right, so their futures are open 24 hours. So we can look at that after. Okay, so let's walk through this now. Where is it? Right here. Let's walk through this now. Okay, let's read this. So very clean play, went through a lot of chop, however, did not take a trailing stop and let the numbers play out after getting good fills with the initial morning leg pullback at the 618 and 786. Okay, so here's the 618 right here, and here's the 786. So what we did on this play right here is you have your entry waiting. Okay, like we're not even waiting for confirmation. We have it waiting. Your stop loss is always going to be the swing low. So basically the low of the day. Okay, that's where your stop loss is going to be. And then so on the way down, you get filled. And then my brother right now, we're just using this 0.169 as the target. All right, and there is the profit, $625 with 6 contracts. So you split it up. So you start off with you could do 2 contracts on each level, 3 contracts, and then 3, however you want to do it. But make sure that you're sizing appropriately. Okay, so on this play right here, if it goes wrong, right, so like if it breaks right through everything and you get stop lossed out, it shouldn't be more than your gain. So if your gain is going to be 625, your loser should be a maximum of $200 or $300. that gives you a good risk to reward. So then if you have a 2-to-1 risk to reward, you only need to win 34 out of 100 trades. And that's how you stay alive in the game. All right. So we came in, had the orders waiting. Okay. And look, and just watch this closely, guys. Let me move the box. When you start trading Fibonacci, you're going to see a lot of these candles. What happens is in the bigger picture here, everything is red, but as soon as you start coming to the fibs, you start to see these wicks, right? And that's a good sign that there are some buyers in there. Okay, you start to see all of these crazy action, like look at this big push, back down, etc. That's showing you that there's some algorithms in there, and you get your outside bar, okay, and then you get this little doji as well that lines up on the 786, and then from there, there's the explosion. And then there is your new high a little bit later after we consolidated right there. Okay. So that's fibs. And, you know, I wrote a whole book about it because it's the most powerful trading strategy, period. Like there's nothing better than that. I'm just going to tell you guys that when you hit it, guys, like we took profits here, right? But, you know, if you could have held this for the whole day. And the fact that you're getting in on the pullback is all that matters, because you are not going to be the rookie that's buying the highs anymore. You're going to be that person that waits for a good deal. And if you trade with that concept of waiting for a good deal, you have a way, way, way higher chance of making money, because you are going to get good risk to reward. Hit me with a 9 if that makes sense. All right. And make sure you guys follow this account, TWIIB. Okay, this is the small account challenge right here. So we are on day 59. So we didn't take any trades on the Thursday, but day 59 right now. So, you know, keeping it realistic with you guys. No, you know, no $1,000 to $1 million challenge. No, nothing fake, guys. Like, I don't even want to talk about those things because it's pathetic. It's, you know, you can't, risking all of your capital on one trade has to be the dumbest thing that I've ever heard. So, you know, you guys are not in that category. So I'm not even going to waste your time talking about that. So let's continue. So now we had the 11th and the 12th, which was basically Monday and Tuesday. Okay. So let's go into there now. Let's hit the replay. Boom. Okay. So what we're going to do here is we're going to go ahead and draw the low and the high like we always do. And in this one, I'm going to pull out the triggers and I'm going to mark the triggers up so you can see that. Okay. So here we go. I'm going to go to the triggers, and this was for the 12th. So we're going to draw the triggers, and let's go ahead. So the long trigger was 44444. Okay. Very interesting number. So I'm going to put that in red. Okay. So keep an eye on that. All right. So again, we want to be long above that 44444. So here we go. First candle comes in, opens dead in the middle. So anytime something like this opens in the middle, I am not really a fan of trading in the middle, because a lot of the times you can go back and forth. You can get whipsawed. You can get chopped up. Okay. I don't like to trade in the middle. So what I did in that case is I just waited for my trigger, which was 4444. So let me go back to the live commentary, and I'll walk you through step by step how we went through that. Okay. So, all right. So there we go. So good morning, all. Big rally overnight. So the bull stepped in on the 50% fib. So this was something I noticed that came off of the daily chart. But even though we opened with a gap, you could see we gapped up there, but we're still inside of the range. So because we're still inside of the range, I'm going to pass on the opening range breakout, especially since we're in the middle. Okay, so I'm going to pass on that. So I didn't take the orb. And what we did instead is we looked the trigger long. So the trigger long came in around 948. And then I'm gonna show you how we scaled that out and how we made money on that. So here we go. So again, I'm not touching anything. We got a big, powerful bullish bar right there, but I'm still waiting for the 4444 because that's my trigger level. And then we pulled back just a little bit, and you can see right here that this was like an algo fill. Okay. If we actually take the fib and we draw it on just the first two candles, sometimes you'll get these algo fibs, and you could see it right there, guys, right on the 618 right there. Okay. So let me just line this up a little bit better. So we had a 50 and a little bit of a front run on the 618. So whenever you see these type of candles, you know that basically there's an algo stepping in. Like the wick is what shows. The wick of the candle is what shows that power. Okay. So here we go. So I'm still waiting for 44444. Boom. So we get it right there. Okay. So we get 44444. And what I'm looking for here, guys, is I'm looking to see if we can break the previous day's high, right? So we have that, bam, right there. Okay. So that was that. There's the move that we're looking for right there. So we had the trigger is basically you're expecting that once you get in here that we're going to make a move and we're going to break the previous day's high, and then we can possibly squeeze higher. And then you'll see my commentary here. Can we flush through 445? Send me some power. Don't get greedy. Here could be a false breakout. Who's banking? Stops at break even. No time to play with my food. So 2 days green. So that was really, really nice, because when you're trading a trigger, you want to see that momentum. You want to see it get filled and you want to see it squeeze through, right? And then what I do again is looking for the previous day's high. And then once you break through that high, you really want to scale out really, really fast, okay? Because it could be a reversal. And again, and then from there, you want to get your stop loss to break even if you decide to hold a runner, all right? So hit me with a 4 if that makes sense. So I'll take some questions at the end, guys. Okay, I'll get back there. I'll take some questions at the end. So hit me with a 4 if you follow me there. Right. So that's a trigger. So what did we talk about today? So I taught you guys opening range breakout. I taught you guys Fibonacci, and I taught you triggers. All right. So there you go. So those are the primary strategies that I'm looking for. The next thing we have are fractal trades. Okay. And that's pretty much the last thing that rounds out my strategy. And I'm going to show you guys that right now. So here we go. Boom, bam. All right. Okay. So now let's continue and let's do Monday. Okay. So same thing. We are going to go ahead, and I'm not going to draw the previous day's higher low because you'll see that we actually gapped down, right? So here was the low right here. So we gapped down below that. Okay. So anytime we have a gap, especially a gap down, I like to use an orb. So I started off here on the 3-minute chart, and we took an opening range breakout, and this one was our only loser of the week. So it kind of sucked because it was the first trade of the week, and it was a loser. So we got a fake out here. This was a pretty nasty one because we got filled short right here. You see how it broke the low of the orb, and then it came back and stopped us out. So some members used lotto options. So in that case, they never got stopped out because whatever they put into the contracts is what they were risking. But for me, that was a stop out. Okay. So once I got stopped out there, I switched over to the 5-minute. Okay. And let me just walk you through that step by step. So here we go. All right. So here we go. This was the orb right here. Boom, 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 boom. All right. So 1 minute to close. So we went short at 9:33 on the orb, 3-minute orb, and I got stopped out at 9:36. So that was a loser. But from there, I said here, I'm switching to the 5 and the 15-minute chart right now. Okay. So far, it looks like a lot of stop hunting by the algo. So because we had a gap down on a Monday morning, there was a lot of shenanigans going on. Definitely. I re-entered short right here around 9:40. And what I did here is I used this outside bar as my guide. Okay. So I started short right here. And then you're going to see what I did here is I added a Fibonacci to this play. And this play ended up really going really well. So here I drew the Fibonacci for the room right here. Let me draw it for you guys right now. So we took the fib from the high to the low right there. Okay. And when we pop back up here on the 618, this is where we added again short to the position. So we're using that concept I just taught you of the morning leg. Here's the morning leg from the high to the low. Here's the morning leg. It came back up to the 618 right there. So what we did, I started shorting here. And then when we came back up here, we added to the short position. Maximum stop loss was the high of the day up here. All right. And then from there, guys, we started to turn. Took a little bit of time. Don't get me wrong. It took a little bit of time this day. It was a little bit painful to watch all this chop. But then from there, we finally got the breakdown. And it was an excellent play. Just took a little bit of time to work out, but sometimes I do add to an existing position. So once we had this 5-minute outside bar, got short here, turned around a little bit, added one more time on that 618, took us down. And if we go back to my brother's small account challenge here, he took the same play. Where is it? Not that one. This one right here. So this is the same play again. So this one was $578 in profit, adding on the 618. And he did a little bit better here because he actually got in on the 786. So guys, just imagine how that feels. So you see that wick there, it touches the 786 like exactly. So he had an order sitting on the 786 right here, guys. And it touched it one time. He got filled short and it just rolled over. So that was really nice. That one was really nice. Hit me with the 5. Hit me with the 5 if you've ever been in a play like that. Have you ever been in a play where you get filled like on the exact level and then it just flushes in your direction? That one was a nice one. So hit me with the 5 if you've ever done that before. And that's why I love the fibs. The Fibonacci is going to allow you to do those type of plays, right? Because you're looking for that next leg down. You're looking for the next leg, right? So here's the first leg, and then the pullback into the second leg, and then bam, we just roll over. That was probably one of the most satisfying feelings in trading that you can have, is pretty much getting that big boy. All right. So there we go, guys. There we go. It was a short week, but it was a great week. Started off slow right away on Monday with that loser, but then from there, everything else was really clean. And, a lot of people sometimes will give up, and I see this a lot. Like if the first trade of the week doesn't work, they just quit, and trading is a game of odds. It's probability. So if you're not taking the trades, if you're not taking the opportunities, you're not going to make the profit, right? You have to be willing to do some, you have to be willing to take a risk in order to make a reward. All right. So there we go, guys. Boom. Thank you very much there. That was the recap for the week. Hit me with a 10 if you enjoyed the recap. All of these were live commentary I draw the fibs in real time for my members. I try to, give my step-by-step where I take my profits, where I put my stop loss, try to explain everything to the best that I can and not look at things in hindsight, because that doesn't help anybody. All right. So hit me with a 10 if you enjoyed that. All right, guys, I see a lot of you have a lot of questions about the fibs. So there's 2 resources for the fibs. The first one is the Fibonacci playlist. It's completely free. Check it out at tradingwars.com. Just hit play right here. You'll get the Fibonacci playlist, which, there's a lot more content for you to learn there. And if you really like the fibs and you want to learn a lot more about it, and you also want to learn how to use it with options, grab a copy of my Fibonacci book. The first part is all about the fibs, and the second part is how you can use the fibs with options, and use like lotto plays and conditional orders and those type of stuff to basically have it automated. Definitely this book is great. It's my first book that I wrote. So, if you're interested, grab a copy. The price is going to be raised soon. So if you guys are interested, grab a copy. You get 1 month for free in the room, so you can trade with us live tomorrow morning. All right. So I think that's a pretty sweet deal. You get the book for the education and you get the real-time experience. Come trade with us tomorrow. Otherwise, you can just check me out right here on the main page right here, tradingwars.com. This is the spy room and then our stock room where we do stock trades as well. All right. So I know some of you had questions. Please go ahead and let me know what your questions are, and I'll try to answer them really quickly, and we will wrap this up. And you know what? Let me go ahead and do a giveaway for the Trading Wars Army members. I haven't done one this week, so let's do one for the Army members. I want to show some love to the people that are a part of the Trading Wars Army. So hit me with a 1 if you're a part of the Trading Wars Army right now. If the low is broken on a measured move on a smaller time frame, but on a larger time frame. If the low is broken on a measured move on a smaller time frame, it has not been broken yet. Do we reverse our bias from bullish to bearish, or should we wait till the low is broken on the larger time frame? Both can work, right? It doesn't matter. what you're looking for is good risk reward plays. So my advice is I always try to take as much fibs as I can. And but on the 5 minute chart, when I'm trading, like day trading, I'm always looking at the fibs on the 5 minute chart. I'm not looking at the higher time frames. If I'm doing a higher time frame, a Fibonacci, it's most likely for a swing trade. So you have to make sure what you're doing. Are you day trading or swing trading? But the fib levels definitely work on all the time frames. And if you use larger time frames, you can go down to a lower time frame and apply them as well. But you just have to be consistent with the process that you choose. So for me, I'm always on the 5 minute chart for the day trades, and then I look on the daily for the swing plays. Okay. Hope that makes sense. How to play same day contracts. Just the way you would play anything. The only difference is that when they expire at the end of the day, if it's not profitable, then you're going to lose everything you put in. That's the only difference. All right, so let's go here. Let's see the Trading Wars Army in the building. Boom, boom, boom. Your channel, memberships. Where are my people at? What other questions you guys have? How do you automate your trades? So I have some videos on that. That's a topic that I've talked about. It's a pretty big topic. So definitely check out the channel, and you'll be able to see a little bit more on that. But essentially, it comes down to using conditional orders for options, right? You can do conditional orders for options, or if you're doing shares, you can do something called stop limit orders. Okay, that's pretty much the tools. But not all the brokers will have that ability. So you have to make sure that you're using a good broker. I use Interactive Brokers to do those. They have the full capabilities. All right, so here we go. So we have, how many members do we have in the Army? Let's see. All right, so I'm going to give you guys a chance. If you want to sign up right now in the Trading Wars Army, I'm going to give you guys a chance right now. And you have a chance to win the giveaway today, which is a book and 1 month for free in the room. So let me just show you guys how to do that. All right. So if you want to join the Trading Wars Army, all you have to do is go to this to the channel. So this is the main channel, and you just hit join. And then for $4.99 a month, you get all the emojis, priority questions, and you get giveaways. So you have the Trading Wars Armies have their own giveaways. So what we're at right now, we have 87 members. Okay, so you have a 1 in 87 chance of winning. All right, so if you're interested, guys, you can go ahead and sign up for the giveaway right now. Join the Army, and I'll keep taking questions for a little bit. So yes, risk to reward. If you just think about it like this from risk to reward perspective, right? Let's just fast forward here. So let's just go back to this one here that we're talking about risk to reward, and then we can talk about that. So let me remove all of this. So if you're buying a breakout, right, and you put your stop loss at the low of the day, your risk to reward is going to be bad. So here's the example we're talking about. So here's the fib, right? This was the morning leg. Here's the pullback. So if you buy up here and you put your stop loss at the low, okay, that means, right, let's take it to the end of the day. So let's say this is where we closed. So that means you would have made 1.33 times your money. Okay. However, if you go ahead now and use a fib like this, and let's say you bought on the 786, which was one of the buys. Where's my tool? Where did it go? Oh, it's here. So if you go on the 786 instead, and then you put your stop loss the same place, right, the low of the day. Now, if you bring this up to the close, now all of a sudden you're making basically 10 times your money, right? So in one situation, if you're buying the breakout, you're making 1.3 times your money. In the second situation, you're making 10 times your money. So that's the difference. That's a huge difference. So now if you make 10 times your money, say you put in $1,000 on futures and you made 10 grand. Okay. So if you make 10 grand here, you could lose the next 10 trades and be break even, right? But in this case, if you took the same trade here with this breakout, you only make $1,300. Okay, so that's what risk to reward is. Hit me with a two if that makes sense. Can you explain how Fib works on daily swings, AMD? Sure, let's look at that, brother. You know, the daily chart is a little bit more different. On the 5-minute chart, you're going to see leg after leg after leg after leg, right? You're going to see that. So the last Fibonacci that we've had on this chart, we can start from the top. Okay, so let's start from the highest point, which was November 30th. We made a new all-time high, 165, basically, right? So let's start now. So this is how you draw your legs. So you start off, you take it from the high to the low. Okay, so the first move that we had here was pullback. It went to the 382, traded to the 10% extension, then we moved higher. So what you do is you always move your anchor every time there's a new low or a new high. So here was your anchor. Now you move your anchor over here. Okay. So then we traded in this range for a while. Look at, we rejected the 50% time, the 50% fib multiple times. So we rejected it here. We rejected it here. In this case, we pushed up a little bit more to the 786, and then we had that major sell-off. So whenever you have a major sell-off like that, now you have to move your anchors again, right? So the first move was from this high to this low. There's your 5618, your rollover from there. Then again, you move your anchor again. You take it from this high down to this low all the way here. And this is the last Fibonacci that was really in play, okay? So we had that push down, 786, we're rolling over. So right now, the next leg that we're in is here. You take it from this high to this low, okay? So now what you do is you keep moving your anchor the lower we go. You keep moving your anchor. And then once we start to pull back, you look for the pullback for the rollover. And a good example of this is actually PayPal. So PayPal just had its big pullback. So taking it from that high down to the low right here, we had a 618 rejection twice, two times, and now we rolled over. Okay. So you got to look a little bit when you're on the daily chart. You got to zoom out. You got to zoom out, look for important points. Like this was a gap down on earnings. So having your anchor up here is a safe place to put it because you know there's a lot of algorithms involved in the earnings play, right? And then you just take it to your lowest point, and then you could see it here, that double rejection and that rollover. Do you draw a new fib for each leg on 3-minute chart, or just keeping adjusting the anchor to lower higher? I trade basically, you could always adjust it. Those are different legs though. I always trade the morning leg and the afternoon leg. Those are the legs that I'm always interested in. So the morning leg is basically the first half an hour to an hour, and then the afternoon leg comes in around 12 to 1 o'clock, sometimes a little bit earlier, and that takes you into the close. That's the easiest way to look at it. There's going to be many legs, but I like to focus on the morning and the afternoon leg. And that's what I wrote about in my book. All right. So there we go. 43 minutes in. Thank you very much for your time. Very much appreciate you guys. Those are all my strategies, guys. That's what I do every single day in the room with everybody. We go through everything live, and we try to make money every week. So I hope you really enjoyed the stream, and I want to thank you again for being here. Let me go ahead and just pick a member right here for the giveaway here. So we have 86. So I'm going to do a random number generator right now, and I'm going to do 1 to 86 right now. So 1 to 86, generate, boom. So the winner is number 36. Okay, so I'm going to go ahead. So actually, did I do that on stream? Okay, let me do it again because I don't think I did on stream. Okay, number 49 is the winner. Okay, so 49. All right, so 1 sec here. I'm going to count this up right here. Okay. All right. So the winner is, let me take a screenshot. Drum roll, please. Chris Reynolds. Thank you, brother, for supporting the Trading Wars Army. Very much appreciate you. You won the giveaway, so hit me up on Twitter. We'll verify you. We'll get you your book and 1 month for free. Thank you very much for the support. Much appreciated. All right. There we go. Let's wrap it up. Let's get ready for tomorrow. Eat your vitamins, say your prayers, study your fibs, and let's make it happen. All right. See you guys tomorrow. Take care.